What is up, folks? Welcome to another video. This is AnjanFX, and without wasting any time, let's get straight into the charts. So we are watching GBP, JPY chart, and this is the daily time frame. And what do we see over here? Let me just quickly zoom it in. What do we see in here is that the currency today opened above yesterday's close. So let me just quickly change the colors because some people are just say that it's a little bit confusing on what chart you're seeing because oh, just a second, let me just make green. No, sorry, the bar down, let it be red, the bar up, let it be green, and the blue can let it be green once again. Okay, I think this will be comfortable. Okay, so you can see from this chart that the market opened above the close of yesterday's candle. So what do we see over here from the last week on the daily chart is a big run on the downtrend. So the market was running down for the entire week, and you can see over here the market opened and has created an high above day before yesterday's high, but it has not cleared the high 3 days back. Okay, so what do we have to understand about this situation is that the market is on a downtrend, but it has opened a high above the close of yesterday's candle. So this is not a great matter, but we have to look for the close of this market. If it closes above yesterday's open or close, then there's a problem because there'll be a new swing high and swing low formed in the opposite direction. So let's look at here. Let me just zoom out from this chart. So as you can see, I have marked in these gray and red patterns the whole numbers 152, 150, 148, 145, 142, 140 and 138. So what does this mean on the GBP JPY is that the market makers, the institutions, the banks, they trade at these levels. What the bank do? The bank doesn't say I want to enter my trade at 145.93456. The bank just says I want to enter a trade at 145. They're sharp and precise. They often choose whole numbers. The bank doesn't say, I want to enter a trade in 148.880. The bank says, I want to enter a trade at 148. So what does this happen? You can see from the past history or so, the market always stumbles across these whole numbers. See this 140 level, how much it stumbled, and see these levels once here, twice, thrice. On 145 level, see at this level, this level, this level, 148. The same thing is happening now at 148. So the market has to either go down, penetrate this level and go further down, or it should go back to 150 level. But since it's in a downtrend, what can we expect is that it should go down for intraday traders. Okay, so let's go. So it's in a downtrend. So we are not position traders. We are scalpers. We are intraday traders. So what do? We look for small positions in the intraday. So mainly I trade the London session. For me, small positions are more than enough because I trade only the London session. I trade when I start my trade. I put in my trades when the London session opens, and that's it. Now let's go to the 4-hour time frame. Sorry if I'm being too fast because time is most valuable thing in this world. Okay, so this is the 4-hour chart. Okay, what you can see on this 4-hour chart is again continuous downtrend from the past 2 weeks. So these are swing high, swing high, swing high, swing high, another swing high. So what do? I already analyzed this market previously today morning. I'm marking this previous swing high. All right. So this is the previous swing high. Okay. That was a previous swing high over there, and what does that mean? So that means if the market breaks this swing high, it's actually going to make a it doesn't it it's actually shows a change in the trend. But what do we see over here? Let me mark it from here. It has broken, but it is not yet completely to the other side. Let me just look at it this way. The swing high of the day before yesterday is not very high. You can see at this point it has not been broken, not yet violated. You can also see here on this one. Yesterday's swing high is also not yet been violated. Oh, that's not yesterday's swing high. I'm sorry, that is day before yesterday's swing high, because this moment I actually caught this trend. This was a trade on the London session, and this was yesterday's London session trade. And this was yesterday's London session trade, and this is day before yesterday's London session trade. Oh, my emails and pop-ups, I hate it. Okay, let's keep that aside. Whatever you say, these pop-ups, you can see over here, this is London session, this is another London session. What do you have to do? We have to expect another London session over here. Okay, let me just quickly remove this, and let's go to the hourly chart, hourly time frame. Okay, so you can see here the high Kanashi candle. Why do I use the high Kanashi candle? Because I feel more comfortable with the high Kanashi on the hourly time frame, because my strategy works like that. So whatever you see between these two lines are the Asian session movement, and whatever you see in this grayish blue box, that is the London movement, and whatever you see in this light blue sky blue box, it is the New York session. So as I said, day before yesterday in the London session, this move happened, and yesterday this move rallied back into London and New York session. So what we are looking at is, now we have seen bearish high Kanashi candles, so we have to expect for it to move down. So how much does it move down? What's the, I have already taken this entry, so let me just quickly mark it and show it to you how do I do it. So I took the PIPS, took this high, and this is the swing low. This is the previous swing high, this is the previous swing low. So what do? I just mark my fibs from the previous swing high to the previous swing low. So I also, do you remember just 3 to 4 minutes earlier I explained the concept to you on these whole numbers. So what does that mean? The banks wanted to trade till this whole number. Understand? This forex market is completely made by the banks. You know, all the movements, all the big giant movements you see here are all made by the banks. The banks wanted to trade until only this line, this 148 level. But what happened? There are small and long wicks below. What does that indicate? People who are in the trend, they would either have their stops below this body of this candle, because they think, oh, this is a great resistance, let me have a body over here, let me have my stop losses over there. What do the banks do? They rally them full completely down, cram them into the market, because you can't make money until somebody is losing in forex market. So they, when the stops are broken, the trade just explodes. It just moves away in the direction that they want to. So what do? We don't trust the wicks. We go to the body of the candle. And one more reason not to trust these wicks is because every broker, you believe me or not, I have traded and tried many brokers, but every broker has got different numbers, different figures on this wick. Some broker might have 147.738, some broker might have 147.766, whatever it is. But the bodies are always accurate, so I go mainly with the bodies. So what does it happen? The market tests the 62% twice on the 4-hour chart, and the market tests the 70%, 70.5, and it just touched the 79%. And the market has given 1, 2, 3, and 4 times opportunity for people to enter into the trade. So if you are looking for optimal Fibonacci entry, what do? You enter in these 4 points, 4 exact points. The market has given perfect 4 exact points for you to enter into the trade. So what did the bank do? They accumulate all the entries, not at once, but in different times of the market. So what do? They don't enter all at once in one place. If they do that, the market just flows like this because they're playing with big money. They're called the smart money. What do? They enter in different places, and hence they will create a larger movement and they'll create a big momentum. What do? They show the retail traders, that the outside normal small traders, that the trend is going to reverse. Then slowly they let them drag the trade towards which side they want. So moving to the 1 hour time frame. So this is where basically everything is shown. The fibs are properly placed, and I took this trade today morning. I took yesterday's and day before's trade. Yesterday's trade, I took my let me just clear out my fib. Yesterday's day before yesterday's trade was a blind trade. I took it from though it was rallying up. I took it from my London Open and rallied until this New York close 1 hour before New York. And day before yesterday's trades, I actually tried to draw some fibs with the 4-hour time frame, and I also managed to take this. The previous let me just quickly show it to you. Let us go for the 4-hour charts and the candlesticks. Okay, look at this one. That was yesterday rallying down, so this was the low over here. Okay, got it on the 4-hour time frame exactly. Now let's go back to 1-hour time frame. Okay, now that was my fib. So what happened? The market tested once and twice at 62%, 62% and 70% are the OTE, that means the optimal trade entries. 72% it gave 70% it gave proper entries for us to enter the market. So I entered over here and I made then we ran it down to the market. I actually closed before the New York exchange because I was hoping for a reversal at this place, because yesterday I was a little bit skeptical that look at this day before yesterday's market, that was the low of the body of the candle. So what I thought was the market would stop for the London and then go back, but the market was very good and it moved. The New York session also took it back down and came back and rallied up today morning. I was not expecting this movement because this movement was totally not known to anybody. So let me just show it to you once again. See, this movement is what I'm talking about. This was not known to anybody. I thought the market would close to this level, but it went. It's not a bad thing, but the only thing I feel is that I closed my trades a little bit earlier. It's not a problem at all. I rallied from here till here. These are sharp entries which are very perfect and accurate. So what does this show is that these entries are very accurate. So let me just quickly show you, since you came to this video, let me just show you from the beginning of the month how it's been doing. This is the Asian session. This is what happened in the London. It also carried in the New York session. This is the Asian session. Once again, in the next day, the London and Asia session took it off. This is the next day. It was a ranging market, but there was a good amount of 45 pips in that day. This is another London session. For the first 3 hours, the market was very bad, and after that, it rallied down. This is another day on November. Next day, the market rallied down in the London session and rallied back up in the New York session. Next day, now 9th of November, the market rallied down in London and rallied back up in New York. 10th of November in the London session and the New York session, the market rallied up. On the 13th of this is a Monday. I usually avoid Mondays because You see, most of the market movement occurs in the Asian session, and there will be no moves left for the London session. The Asian session itself moved 142 pips. That's so much of pips. Tuesday, very good day, 14th of November. The high was created here. The market closed here. Wednesday, too much movement in Tokyo, so I did not take this trade. Thursday and Fridays, come on. I guess I skipped some dates over there. It's not a problem. Then today the market is rallying here. Hope it goes. I don't know where it goes. As I said before, it must be rallying down, and we'll have to wait and watch what's going to happen. Until then, until I see you in my next video, people, make sure you stay subscribed and stay in touch. If you have any doubts, please leave it in the comments below. Sorry if there were any noise or voice imbalance in this video, because I'm not a very tech kind of a guy. I need to hire an intern who actually fixes all my computers and stuff. My microphone, I don't know how to make it work, and my phone keeps on beeping in middle of a video. For more live trades, stay tuned in this video. Subscribe to my YouTube channel, because I'll be keeping you updated with all kind of news. And this one I'm telling you after I took the trade, but for the next time I'll be live broadcasting whichever trade I want I'm taking. And let's see you again later in my next session. Until then, see you, bye. Oh, before you go, wait a second, just quickly take my Instagram, because many people are saying you don't reply. Many people complain that I don't reply to them on YouTube, because guys, YouTube messaging is totally not good. I don't like it. YouTube messaging is completely out of, I hate YouTube messaging. So it's always better you contact me on Instagram. So that's my Instagram name, at AnjanFX, and I'll be replying you there. YouTube is not my kind of a thing. And that's it. And one more announcement, I don't do any mentorship or anything. I give advice to people. I don't like to take money for for teaching people, because I learned everything for free on my own. And yeah, that's what. And I don't give out any signals or anything. This is just a thing to share my opinions to people out there. And that's it. I think I made the video very long. It's about 18 minutes or something. Until my next video, peace out. Let's see.